Okay, welcome back to this channel, traders. Let's quickly do a top-down analysis on um, GBP JPY. The only thing I can see on GBP JPY on the weekly time frame is the fact that this was the breakout structure we had, and then what we can see is price reacting from a fair value gap, a bullish fair value gap here. That's where price is reacting from. Let me see. So price is reacting from this fair value gap here. Okay, so that's the much we can see from the daily, and now from the weekly, we have our buy side liquidity intact, our buy side liquidity, and we also have our sell side liquidity. We also have our sell side liquidity. So let's go to the daily. On the daily time frame, what we can see is, okay, we had this breakout structure. So let's just take this out, and so let's look at the internal structure on the daily. We have this breakout structure and this breakout structure. What else can we see on the daily? We saw price came back down, took this side as a liquidity, retested this demand zone, which is the origin that caused that breakout structure, retested this demand zone here, and pushed all the way to the upside. Now, what else can we see? We can see that instead of breaking this or taking out this buy side liquidity, price respected this candle, this last candle, which is our supply zone. Price respected this supply. And before that, we can see that this is the last low. This is the last low that caused this breakout structure. Now, the moment the last low was taken out, this happens to be a market structure shift, a shift of market structure, and then we had price coming back to take all of this liquidity. All of these are liquidity in price. Took out all of this liquidity to tap into the supply zone. Now, the moment our supply zone was tapped into in the daily time frame, what did we see? We saw price pushed down, came back up, pushed down. Now, this is a tiny breakout structure here. This is a tiny breakout structure here. Is a BOS, and this is the supply zone, the origin that caused that breakout structure, and we can see that price is reacting away from it. Now, what price is reacting away from this supply zone? Our next target should be this low here, which happens to be the sell side liquidity. This is sell side liquidity. Now let's go to the 4 hours to see what we have. Now on the 4 hours, we can refine this zone, this supply zone, to this candlestick here, this last candlestick before this push to the downside. So we have this break of structure, we have another tiny break of structure here, we have another tiny break of structure here, and then price came in, tapped into it, and pushed all the way down. This is the liquidity that was taken. This is the liquidity in price, which would have induced buyers, sellers into this market in the early time. So now when we saw this on the 4-hour time frame, what happened? Price tapped into it, came down, now went back inside this block here and pushed to the downside. So if we are to read this, we know this is a candlestick, the last candlestick that caused that push to the downside, because this is also a break of structure, this low, when this low gets taken. But let's go to the 1-hour time frame to read it more clearly. Now on the 1-hour time frame, we can see that after price pushed all the way down, price came back into the zone, came back into this candlestick, and that was where price sold from. Now the moment it sold, took out this low, this was the low, it took out this low, which is our market structure shift. Now after that is happened, what did price do? It tapped into this fair value gap here, tapped into this fair value gap. That is a bearish fair value gap. Tapped into this bearish fair value gap, and what happened? It moved. It tapped into it the first time, came back down, went back inside, and what happened? It sold. Now let's go to, remember there is a fair value gap here. Now let's go into the 30 minutes time frame and see what price did. Now on the 30 minutes time frame, what can we see? The moment price tapped into this fair value gap, it sold, and then what happened again? It came and took out this high. This is a sweep of liquidity. This is it. Took out this high. That is a sweep of liquidity. That is a sweep of liquidity. And after taking out this high, what happened? It broke structure. This is the break of structure here to the downside. Now, when I saw this morning, I knew price was around this zone when I saw it this morning. And then I looked at it. This is a fair value gap. A great imbalance was formed here. Okay? But what will price do? What will price do, guys? Look at it very well. You can answer me in the comment section. Now, what are the things I can see here? I can see this is a fair value gap, which is an inverse fair value gap. This is another fair value gap. Now, price, there is a possibility of price coming back into it, and this is what we call balance price range. Balance price range. This is what we call balance price range. So price can decide to come into that zone and what? And tap and move away from there. This huge fair value gap, I was not expecting price to come back to this supply zone. This is a supply zone. I was not expecting price to return back to this supply zone because I saw what we call breaker block. This is our breaker block. So price I knew price was going to reject from this breaker block. So I had this as my entry. And this liquidity is the sell side liquidity that price should take. And what did we see? Price just tapped into it and got to our TP. Boom. So that is just a 3 weeks to reward trade, but we can still be expecting price to get to this low before the end of today. Price should still come all the way down before the end of today. So we are in a sell trade. We are in a sell trade on this. So price should still take this guy out. So this is how we do the top-down analysis. From my 30 minutes now, I've taken the trade already, but you can still come down to the 15 minutes to have. I knew this guy was going to be the liquidity. This high here was going to be the liquidity in price. So we have this as our liquidity. We can refine this our zone. It's not even refined. This is still the zone. So let's take out this BPR, which is our balance price range. Take it out. We don't need it. We don't need the supply zone also. We have our breaker block. You might be asking what breaker block means. What breaker block means? Breaker block, this is what it means. Price came all the way to this point and took out this low and went back up to take out this high. So this low has been taken, this high has been taken. Now price push all the way down. This guy is a sweep of liquidity. This is a sweep. This is a sweep of liquidity here. When you have this on your trade, this is a sweep of liquidity, and then you have a break of structure. This failed demand zone, because after this break of structure, this should be your demand zone, happens to be your breaker block. So your breaker block is a failed demand zone or a failed supply zone. So price will come back into it to what? To continue to the downside. So that is the breaker block. That is a breaker block. Maybe in my subsequent teaching, I'm going to create a video on breaker block. So then, in case you missed the first entry here, you can also still get another entry. Yes, you can get another entry. This is another entry. After this push, we had this break of structure. Let's mark it out. We have this break, internal break of structure. After this internal break of structure, what can we see? We have a zone. This is a new supply zone. So this is our new supply zone, and that is where price is reacting from. So let's just keep this as our 1:3, and then this is a new engagement. Yeah, we have our stop loss here, 12 pips stop loss, and let's have this is another 3 1:3 risks to reward, just 36.6 pips. So let's see how this goes. Let's see how this goes. So from here we can see that price came to tap into this fair value gap here. This fair value gap here. We have this In case you are new to this channel and you don't know what fair value gap means, I have a video on this channel. You can do well to check it out. So this is the fair value gap. Price reacted away from, came back into it, and is still reacting from it. So let's see how the second trade goes. Thank you very much. If you are new to this channel, just like I said, do well to subscribe. Click on the notification bell so that you can be notified when I drop more useful content. Thank you. Enjoy the rest of your week.